Memorial Day holiday. Awesome tribute to our fallen soldiers and those defending our country. It really was a spectacular weekend, all in all, and a way to celebrate Memorial Day. Now, with that said, we start, and I heard someone had mentioned that this Memorial Day kicks off unofficial summer, and the irony is, man, we have to go through option. I don't know what they're talking about, but summer doesn't even begin until usually the quarterly witching, quadruple witching, right? I mean, I don't know what they're talking about. It's not even near quarterly option expiration. So for me, my calendar is, based on, not that I'm saying I circulate everything in life around trading, but quite frankly, quadruple witching is a few weeks away, and that, right after that, is when we get into the first real official summer, and I guess the longest day of the year. Just from a technical perspective, to be absolutely correct, I believe it's June 20th. So that would be a Monday, and that would also be when we get back from our summer cruise. Anyway, what I have in store for you guys today is a quick refresher of many of you were here a couple weeks ago when we did the workup on the gold, as well as we did another workup about biotech and what sectors are moving, how to run scans with Thinkorswim. We've really done some great work together, and as a nice follow-up, we've had some stellar guests. Of course, Cindy's been here a few times, and she's going to come in tonight. We were going to have Scott, but things got tied up. We had Mr. ThinkScript himself, so it's kind of really nice as just a customer appreciation to say, hey, how do we put things together with Thinkorswim and what we work with? And so with that said, I want to just get right into it, because today is, like I said, it's the end of the month of May. We get right into June. We've got an unenjoyment report, as I affectionately have been calling it for decades. Friday is the monthly unemployment. We call it unenjoyment because if things go wrong, and if you're a data-dependent market that's looking, environment that's looking for either excessive job growth or not enough job growth, the unemployment report has, in history, wreaked havoc on traders' positions short term, especially those who are heavily leveraged positions. As such that people have when trading futures, and of course option writing strategies with undefined risks. So therefore, that's why we give it the moniker of Unenjoyment Friday. This Friday, though, it's kind of weird. I'm not saying that the markets are well, I'll tell you what the markets are telling me. The markets are telling me we have a very strong chance for a breakout to the upside. It's funny, if you could turn back time, over a week and a half ago, people were talking about a head and shoulders top, which we affectionately said, if you anticipate signals, sometimes you'll get soaked, as I put out on my Twitter account. And we had a photo of my grandson getting just soaked. It was kind of a funny thing. It was a play on words, actually. But needless to say, where are we going from here, and what are we doing? And that's what we come in and try to do, what I consider customer appreciation webinars, and share my thoughts and ideas, and show you how to apply that with Thinkorswim. In addition, we have our friends at Thinkorswim who know the product inside and out, and can kind of combine things together. So they really do get to be extremely strong educational events. So with that said, let's get started. First off, this is a presentation that I did. Many of you may have seen this. I wanted to just quickly go through these slides. I'm going to talk for about 30 minutes. Cindy will come in at the last 30 minutes, and we'll wrap it up with maybe hopefully some questions that you guys have. If someone already has a question from past presentation, now's your chance. Type it in. We'll get to it. All right? That might be a really nice way to start. Last month, in the month of, was it last month or the end of April? Basically, let's see, I was in Boston presenting to a group of traders, ironically, that were not all really nice group. It's the Boston area group. They met at the MIT building, or one of the buildings that's at MIT, and a bunch of great smart people, actually, and there were some ex-professional fund managers in their group, and all the way down to people just learning, just starting, that want to to trade and invest wisely in the stock market. We gave a nice presentation. It was well received. Talked about several things, some of which are on the slide. But before we begin, this slide should say it's a risk disclosure. Remember, trading is risky. Take a second to read that over, and then we will get right into it. A lot of the things that we talk about in my presentations, you will find in this book. Phenomenal book for stock traders, including a whole chapter on revealing why I used OBV for the last few decades and why we find that volume indicators aren't working like the histogram like they once used to, mainly because of dark pools and, of course, option trades, right? Many of you are familiar with that book right there, the Commodity Traders Almanac, where we looked at seasonal tendencies of stocks and sector ETFs to commodities. It was pretty groundbreaking when we first started that book in '07 because seasonality wasn't all that real popular. Now, not only is it popular, but a lot of people are using seasonal analysis, and what I think, believe it or not, more institutional traders are using seasonality. And you hear the media folks talk about, oh, the seasonal's this, the seasonal that, the seasonal pressure. It's almost so popular that I think it needs a little tweaking for folks, and we did a very, I think, a pretty good focus on the fact that Thinkorswim added a seasonal trend tool to their arsenal, and that was another one that you could find on our YouTube channel and go back, and we'll push into the links so that you could see those if you've missed those recordings. Pretty good stuff. Anyway, I've created indicators. Many of you are using Thinkorswim. You should finally know the PPS indicator. We'll go through that again. Again, Person's pivots. I can't draw straight lines to save my life. I'll try not to use that drawing tool often. I've been accused of being like the financial John Madden, if you know what football season is, and he scribbles all over charts. That's kind of my tendency. But anyway, high close and low close doji, something that I popularized in a book that I'm proud to say is coming out in its second edition. And it was about 11 years ago that book came out, and we repopularized what the doji was, but more importantly, a little system that was behind the doji, and that's what we call the high close and low close doji scans that we look for. This is that book I was talking about. This is the one that kind of started it all. It really helped popularize, I would say my friend Steve Nissen and Greg Morris were the first two guys that really, launched candlestick popularity. And while, to be honest with you, I don't go around looking for a lot of candlestick patterns. The one that I really, two that I focus in on are the high and the low close doji, and that's the ones that we do. And this is the book that really popularized it. This was some fantastic work, and it really helped to launch training people how to trade better. I think a lot of the people that continue to look for my style of analysis or people that have been around for a while. They've seen everything else, and they seem to migrate towards the methodology because it's very systematic. It's based on a set of rules, and it's pretty good stuff. It's rule-based trading methodology. That's really what I do, and we've helped people with different software and teach individuals as well as professionals in their trading. So with that said, how I train people is real simple. We have, of course, several different platforms, and again, today's focus is on Thinkorswim, and we're going to get into that tonight. And we also do, of course, many of you are aware, and some of you have actually come down to my office here in South Florida and been through my private mentoring, and we do semi-annual seminars, and we have a live trading room, and my thoughts and observations, which we're going to talk about a little bit today, my weekly thoughts and observations. Now, I'll give you a little house cleaning here. We're going to be gone in 2 weeks to a financial cruise that we've done. It's our, I think, 4th annual cruise. This time we're going to fun place. We're going to Spain, France, and Italy in the Western Mediterranean cruise. And then when we get back from the summer, we're going to do an online mentoring session. And then we have our 3-day seminar down here in Palm Beach, Florida, where there's just incredible amounts of things to do as long as there's no hurricane. So with that said, many of you might be familiar with this chart. I just wanted to show you based on other analytics some of the things that I do. And one of the things that I do is instead of looking at a relative heat map, I like to find out from the starting line. If that's the starting line, at the end of the year is the finish line. How many of the different sectors are positive on the year and which ones are negative? And obviously the more sectors that are positive, the better it is for the overall market. And this year we went from one stock sector at the beginning of the year in January when that faithful analyst at that bank said, sell all your stocks. If you remember that, get out of stocks, sell your stocks, and pretty much said it right about here the second week of January near the lows. I mean, how great is that, right? And as we started to see a lot of stocks recover, and then notice that what happened in February, more and more sectors started to get positive. Now this is a chart exactly what I used from a few weeks ago that had a strong argument for seeing that the markets could still see recovery to the upside. And here we are a day after the S&P 500 made the highest weekly close. I don't know if you guys knew about that, but the spiders made one of the highest, strongest weekly closes. So what we saw happening was a couple things. Back at the end of April and into May, this exact chart, and I know a few of you were here for this presentation. I'm not gonna take a show of hands. It's not important. But what I was warning people was that in the month of May, it's like one of the worst times to be buying gold. And what's really neat is that we had several technical tools, and this is just a seasonal chart, and I had this on the chart, and I just had different ways that you could trade the ETFs on GLD. All I'm doing right now is going down memory lane with this presentation, and it's going to be a segue into how we apply this knowledge or this methodology of thinking into Thinkorswim's platform. Okay? Now, this was gold at the time, and a couple things that we had was, well, we were looking at stochastics, but we were also looking at that volume, or therefore lack of, and looking at that rally, and I was talking about the seasonal trend, and I was talking about right here at the beginning of May how the hedge funds were really long, the commercials were on the other side of it, and the poor speculators, the little green small speculators, were also one of the largest net long positions they had in a long time. What our thoughts were in using these various tools, in addition to identifying the fact that we were near a predicted person's pivot monthly analysis of resistance up there, that this market, if everyone's long, who the heck's going to be able to continue to buy and carry it up even higher? And that was a very important bullet point. We also identified the fact that GDX in the month of May, it really starts to peak out, and this is what's kind of important. It really is lagging. GDX is lagging the gold market, right? It definitely peaks out the 1st of June, which, oh, incidentally, starts today, right? So we're going to examine this, how we use seasonal trends. What I'm showing you, folks, is a software called Trade Navigator, Genesis. These guys were literally, believe it or not, about 20 years ahead of their time and have been using seasonal trend analysis since Glenn first literally started this company. So I've used this before even Thinkorswim was an idea in Tom Sosnoff's memories. And so before Thinkorswim, believe it or not, they weren't around forever. It's an amazing story. It's just an amazing story of how they were created and the popularity and the surge of that platform. And I guess the power behind the platform is, again, one word. It's called the people. The people behind. It's not the power of the people. I guess it is. It was the people. The peeps, the toss, the Thinkorswimmers, the people behind creating it. That was the real essence. You know, you got your, and you know all the names. You got your Q and you get your nicknames, right? You got Tom Preston, TP, all the, you know, Frankie Walsh. You guys know all the names. It's the people behind the scenes. Sheridan. I mean, the list goes on and on of all the people that helped make that company phenomenal. Anyway, I didn't mean to give a big pat on the back being, you know, all hyped up about Memorial Day weekend, but I definitely want to say it's just amazing to see some of the tools that we've used for decades all available in one shopping stop of a brokerage firm. And with that said, what we've done is we've gone through and we do our little monthly customer appreciation, as I like to call them, events. And the last one that we did, we really hyped on the fact that gold could go down and the stock market could go up. And seasonality helped dictate that. One area of interest that we had was the IBB, the biotech. And back then, we were talking about in early May, hey, biotech has a habit of running up, and actually from about May and June has a nice little upsurge. There's some volatility that will come into play in June. Just keep in mind, one is because there's some biotech conferences that are coming up into play. Okay? So what I wanted to talk about, guys, okay, what I wanted to talk about was follow up with what we were talking about. And what's really important from a trader's perspective, at least for me, is if something's working, don't fix it. And are these techniques, have they been working in this weird trading environment? And the answer is absolutely yes. So with that said, this was a quote that I had for my people in my weekly thoughts and observation that said, watch for daily PPS buy signals. That's very important when it gets to learning about Thinkorswim in just about 48 seconds from now. PPS buy signals in both IBB as well as the XBI. It's the sector ETFs for long triggers. That's what we want to watch because we're looking for a seasonal upturn. We got some volume convergence, stochastic convergence. We're looking for a breakout above 5270. That's what we were looking for May 16th. Believe me, it wasn't that long ago, right? So here we stand the test of time. What's been going on? If you notice, XBI was right at that green level, which is the person's pivot, and it exists right on Thinkorswim too. So we actually fast forward now. Okay, fast forward. This was a slide that we had last week where we got that long trigger. We got that long trigger. That's the PPS indicator right there at blue thing, right? We were looking for a breakout and a close just above that 5270 area, and it happened on that day at 71 with that indicator. And when we came in here, now since this slide was presented, we talked about a scale out of half the position and then trail a stop, and I am now personally flat this trade. I'm out of this trade. I kind of wish I wasn't because we saw some follow-through strength. But what is the point that I'm trying to make? Seasonal analysis kind of helped alert us to what might happen, and the technical indicators helped to trigger the entry. And this is, again, XBI. It's the biotech ETF instead of using the IBB. But one of the things that we really helped to illustrate was that if we are going to get a stock market launch, there's a few sectors that could really lift the main indices. Biotech is one, financials two, energy is three, and those are the ones, the main components. Technology, of course, is four. Those are the main components that can really lift both the Qs and the S&P 500. And so that was kind of like dynamic information, by the way. And so when we go over to using Thinkorswim, all right, what I've done right now is already teed up something for us. I wanted to run a scan in the S&P 500 using the PPS buy signals. Those are those arrows. And what I wanted to do, since today, it's important that we look at this, because in the S&P 500, how many stocks generated fresh, brand new buy signals based on a monthly chart? That's what we have the power to do. And what was the heavy concentration of buy signals that came in for a monthly environment? Well, we know probably Monsanto because they, big move last month. But you know what's really populating? Banks, and just not any bank, but regional banks. Look at this. In the bank sector, Zion, Regions, KeyCorp, Regional Bank, Regional Bank, Regional Bank, Lucadia, Diversified Financial, ICE, We have some Fidelity National. This thing surged too much, but what's interesting is that we have some pretty decent buy signals for the month that had generated based off the PPS indicator. So what I want to kind of do is today go through why is it important to look at some of these longer term charts, right? Because there's two things. It's not just absolute price, it's also market condition. So what I like to look at is this market, for example, in Google, kind of an uptrend, sideways action like all year, right? It hasn't really done anything. And we use this volume tool called on balance volume, and really Google hasn't done anything. So the last known signal was way over here. It was a buy signal. You see the arrow pointing up right here. So it hasn't generated a fresh new buy signal. It's not in a sell either. So this market actually, if the overall market kind of gets a little lift, Google could see some upside. But that's not what's on our scans right now. What is on our scan? Let's take a look at QCOM real quick. Now, Qualcomm is an interesting component because, you know, this is a stock that has had a pretty hefty, there was your first PPS monthly sell signal. I mean, it actually broke an uptrend, and it's just not generated a longer-term buy signal until today. And that, my friends, note what the condition of Qualcomm is. It generated a buy signal on an accumulation of volume. In fact, if you look at the volume reading here, it's like at the same price level not seen since price was up at around 65. There's your little buy signal on Qualcomm, and look at this. 1, 2, 3, 4, 5. In fact, Qualcomm, you could consider this like a doji right there. It just closed above the high of that doji with a PPS buy signal. I'm looking at this saying, gee, this to me, for whatever reason, and I don't know if maybe there's a 2-year cycle effect of the market, that I'd have to do a little bit more work. But I have a heads up that this stock right here might present itself at the very least, if it is going to maybe stop the descent, at the very least, it should move up to sideways. And so now I can do a little bit of some short-term analysis and say, gee, we have now broken out of this moving average and an algorithmic change took over. So Qualcomm is now giving me the idea whether or not it rallies sharply is going to depend on maybe more upside over time. But from an options strategist perspective, I can start to look on the short-term charts, the dailies and the weeklies, and maybe identify the fact that until it generates a sell signal, we're bullish to neutral, right? So for me, I think that this is, at the very least, a chart analyst would start drawing trend lines and say, hey, we broke out of some trend lines. Qualcomm should probably not visit this price quadrant again between the 50 and the 45, or stay above that level in the next 2 months. If it does have an equal and opposite, which means that the market has a buy signal 1 month, right? It broke out, closed above all these highs. An equal and opposite would be like in the month of June, it reverts immediately right back and rejects the breakout to the upside. It just goes up and then back down. It's called a 2-bar or 2-period reversal, a 2-bar reversal. I'm thinking that as long as the market maintains its structural value above 50 through the month of June, this is going to be some great put writing strategy over time. So, or maybe in the short term, we can be looking, since the higher degree monthly time frame is in a buy, guess what we can do? We can start looking for taking short-term buy signals, and therefore, folks, here's what's really cool. The person's pivots, the daily charts, we can start looking for maybe some short-term pullbacks. So over the next day or two, look for some short-term pullbacks, between 50 and maybe if we get lucky, the upper 49s. So if the market is still going to maintain its new monthly turn, we shouldn't see this market at the end of June reverse back course. So if we get a pullback over the next couple days, my take is start looking for some buy setups against pivot support. That's what's really cool about using the pivots and the multiple time frame. I hope I didn't go too fast on this, but what I like to see at the end of every higher degree time frame, like the end of the month or the end of the week, more importantly, the end of the quarter, which is coming up, right, at the end of June, quadruple witching, I like to see what stocks and what sectors have changed a longer-term trend. Qualcomm's one. This is pretty bizarre stuff. So, I mean, if we are looking at from a seasonal and a longer-term technical picture, we have the ability in Thinkorswim to help define better trades with the tools at hand, right? So let me go back, restore the sell. This is what we covered before on how to use the seasonal trend tool. If you're not familiar, I'm not going to make you watch another video of ours, but we did. But basically, all you have to do is go to Styles, so the style right there, Chart Mode, and you have your standard monkey bars seasonality. Click on seasonality. So once you have that, then you can, there's another function that you can go up and go to appearance, and you can have the average, which I have right here, or you can have the yearly and the average, which breaks down all the different years. I'm just going to leave it on the average of seasonalities, and we're going to go back to QCOM, Qualcomm. So Qualcomm, if we take a look at the style one more time, and I'm going to go daily, it's only 2 years. I don't want that. I want to go back as much as I can. So I'm going to go 20 years. Let me get a weekly chart, and I'm going to go back because it's way too many lines. And I'm going to go appearance. And what I want to do, folks, is just go to the average. Hit apply, hit OK. And you know what's funny? Look at the average typical time frame. Qualcomm actually has a time frame where, its seasonal trend from about April into June goes down. Well, so from the peak, this is 1 year. Maybe the anomaly is it did actually go down, and maybe, just maybe, if we shift to the left a little bit, it bottoms out in mid-June. Maybe we're 2 weeks early, 2.5 weeks early. So what's the point I'm trying to make? Seasonality is not the end-all. Sometimes you have to use seasonality in content of superseding and using technical analysis. Maybe this was in a horrendous debacle. Maybe the company's going out of business. You just don't buy something because it's seasonally strong. You got to take a little bit of look-see. But I just ran a scan and saw Qualcomm, if you notice what I did on a monthly time frame, generated a buy signal on a monthly basis, broke out of a longer-term downtrend. This tells me that at the very least, maybe it hasn't defined an uptrend yet, but at the very least, it's broken a downtrend. What does that mean? At the very least, it means sideways to up, neutral to bullish. It shouldn't crash again. If it does, that's what stops and defined risk strategies are for. So to gather an idea and say, gee, Qualcomm might be an idea that it could actually go up or stop falling. But from a seasonal perspective, what's even more exciting is from a seasonal perspective, typically Qualcomm has a liftoff, as you can see, a higher degree trend from a seasonal perspective over time, starting mid-June, which has already started a little early. So that's why I think the whole combination of how do I find trading ideas? How do I get ideas? I use seasonal analysis as a part of my tool, but I use the function of the computer to help me find, by using these scans, to help me find trade setups, and more importantly, to help me find opportunities that maybe I might miss by not using the right time frame. So being today May 31st, and the scans that we run based on today's close are for the month of June. That's why running the scan today is pretty cool. So just do it again. Just run the scan. There they are. And what's also really cool about Thinkorswim, and I just found out that we've got Cindy in-house. She's here right now. So we'll switch this over, is that you can run anything you want. And that's what's kind of the neat thing. So I think, just as a reminder, how do we find, when we come into the end of a time period of different opportunities, run those scans. It's very powerful. It's part of what we do. If just in case that you guys are not familiar with this, I'm going to, before we switch over to Cindy, just give you an opportunity to see if you wanted to take a test spin. This is a weekly planning and scanning analysis that we do. We cover sector ETF stocks. It's like an advisory service that we put out every week. It's $49 a month. We have an annual discount. You have an opportunity to actually, if you're interested in the annual discount, or take it for a test spin, take this out, check it out. It's an incredible product. We've done an amazing amount of work this year, providing lots of inside information, insights that were just like gold peeking out, things that we've shared, where to follow. It's a great way of not just learning, but getting ahead of the crowd. And I just wanted to throw that out there. We had a Memorial Day special. We had a webinar last week, just as a reminder. It was a special. If you missed it and you were interested in it, you can find out about it, call our office, and we'll get you more details about it. We'll pass that along to you. That's my house cleaning. That's all we wanted to present to you guys as far as putting things together, following up what we did last month, and then running to find out the exciting opportunities that what we've got going on as the new month begins. So I'm excited to see Cindy again once a month. It's like a regular. And you know what? She has to juggle so much to get here. I want to make her time worthwhile for you guys as well. So she knows how to get the PPS indicator. You guys know how to get it, what it is. And just to leave you with this kind of funny, I want to be fully disclosed. When you do that license study, you can also find out how many sell signals were. So let's find out. Just to leave you with, we'll turn it over to Cindy. By the way, those are only the sell signals for the month. Obviously, you got an idea from a rate of measurement. There were a lot more monthly buy signals than were sell signals. If it were the opposite, I would say the market's probably in a flight to quality, and we got big problems. But we don't, because we had more buy signals than sell signals. We got to do a little more work there, but this is a great way of finding trade opportunities, guys. Anyway, I wanted to turn it over to Cindy and welcome her here. And you guys, I hope everyone has a great month of June. Cindy, welcome. What's going on? I see Cindy's in-house.
Thinkorswim, I can see it there.
There, can you see Thinkorswim? And is the audio coming through?
Yes.
Okay, excellent. So, John, I can't see the chat.
I'm going to hang up.
Okay. I can't see the chat, so I'll let you feed me questions. But I did notice somebody earlier was asking for that scan, and just looking at your screen, it looks like all you had done was scan in, and you chose S&P 500, so that's what everybody can do on their computer right now. And I added a last price filter, but I noticed you didn't have that. You had a stock filter, but you weren't using it. The only filter I saw you using was your buy signal. So I actually added a volume filter, but we don't need that. So at home, if you want that scan he just did, scan in S&P 500, and then add study filter, click on the name of the filter, go to the license studies, go for the buy signal. I already have the buy signal, but here we'll do it again. And then John was running it on a monthly aggregation. So change the D to an M, and then run the scan. Now, one thing I did, because John was just talking about, notice when you run a scan, what sectors are coming up. Well, so I went ahead and did a right click on any column header, didn't matter which one. Choose the word customize. Then I started typing the word sector, and that's how I was able to add sector right next to the symbol. And John, I love your idea of using scans as market indicators, or using scan results as market indicators. I do that all the time, and I have certain watch lists that, just little things, like how much of the S&P 500 is above the 200-day moving average line and the 50-day type of thing. I hadn't thought about, scanning to see which sectors are represented in the results. So I might have to borrow that idea from you. It's a pretty good one. So when you click one time, it sorts them alphabetically. Click twice, it does a reverse sort. 3 times, and you go back to no sorting. And so to what John was saying, when you're running this scan, if you're using it as a leading indicator for the market, make sure you have that sector as a column, sort by it, and you can see that we're picking up more and more financials, whereas if you ran the scan maybe 3 months ago, you didn't pick that up. And of course, in the healthcare, we don't have the industry groups in here, so you'll need to know which ones are more of the biotechs versus just regular healthcare like a Pfizer. But a really nice way of doing it. Again, you don't need to share it. All you need to do is add this one filter, switch it to monthly, scan in S&P 500, and then the other thing you could do is top right, there's a little campfire here in honor of Memorial Day. With your s'mores, get those marshmallows and the Hershey bars. Right next to that, save it as a query, and then call it whatever you want to call it. Person's monthly index watch is what I'm going to call it. And then he took it one step further and used it to generate trading ideas. And that's why I have the number 4 in here, green, because that way when I click on a symbol, any symbol in here, we'll click on our ICE exchange here, it should be waiting for me on the chart if I have the chart also on the green. So I need to get my green number 4 here. Go back to my scan results. Where's our ICE exchange? Financials. Here it is. Click on the number 4, and the chart should be waiting for me. Why am I picking up McDonald's? I must be linked somewhere else here. All right, we'll do it manually. And then you have the ability, if you have your chart set up. Now, something else that John did was he looked at a seasonal chart. He used the monthly chart to generate a heads up. Hey, there might be a trading signal right around the corner, and then he dropped down to that daily aggregation for the specific entry or exit signal. So one thing you could do is set up a grid of charts in order to have all that information handy. And we can grid side by side, or we can grid on top of each other, your choice on how you want to do that. And if I come in here, green, come in here, green, and I have a different default in here. So I'm going to show you a time saver. Let me go back to the original chart. I'm going to click on Style because we want the monthly pivots and we want on-balance volume. And in fact, I noticed John actually did not have regular volume, so we'll take that one off. Style, set as default. Because now when I open up the grid, it will have these settings. So I open up the grid, link in here. I obviously have McDonald's linked somewhere. I'll have to figure out later what I have linked to the green. Here, let's just do this. Link orange. Link orange. Scan results. Orange. Then later I can figure out what I have linked to green. There we go. Ice. And orange. Now on this one, I'm going to double click on the name. And remember, we wanted to look at a daily aggregation because the monthly gave us a heads up, but he was talking about that daily aggregation to give us maybe your entry signal, or even what do you want to trade? Do you want to use the options? Do you want to use shares of the underlying? What do you want to trade? And then I'm going to use my little spoke here, or arrow, to go to that bottom chart. See in the grid? Now I'm on the bottom chart, and he brought up a seasonal, so we're going to switch this up and make it seasonal. Appearance, take it from standard to seasonal. And I personally like the yearly because I like to see all the different years stacked on top of each other. But he was using the average plus this year in order to see that. I'm going to go with yearly. And 5 years daily, that gives me plenty of information. And now I can look for the seasonal pattern. So the indicator gave us a heads up, and then I wanted to look for the seasonal pattern. So here's what it looks like when we're done. I have my seasonal chart down here, so I can quickly assess, is there a seasonal pattern? And if there is a seasonal pattern, are we at the beginning of that seasonal pattern starting? I have my daily chart to fine-tune that entry signal, and I have my monthly chart to give me the heads up. And I have all of them linked here with our orange 7 so that when I run a scan, I can click on that orange 7 and immediately see all of this. Now it takes it a couple seconds to set it up, and then we're going to click on the grid, and we're going to save the grid. You know, I've never tried a plus sign, so let's see if it'll do that. Ah, it works. So I just did an experiment. I know you can use numbers, but not as the first, well, you can as the first character, but there you go. Seasonal plus pivots. Again, you run the scan, you pull it up, you double click on the name, so you can take in a quick peek, double check for that seasonal pattern. And are we at the beginning of a seasonal pattern? This one a little bit. These 3 years it played out. These 2 years it didn't. So not nearly as strong as the pattern we had earlier in the year, or the really strong pattern right here. There's your strongest repeating pattern. And then of course if you decide it might be time to enter, then you can come in here on your middle one on the daily. So John, are there questions in there? I was just kind of trying to follow through on some things you started and show them some time-saving tricks.
Yes, Cindy. Actually, we got, if I may, gosh, where we get their microphone here? Here we go. Make sure. All right, so Viviana asked a really good question. Will a scan work on ThinkBack, or can we see how the results changed from last month? So that's kind of a yes and no answer, to go back and see how the results change from month to month.
Well, and ThinkBack is just a static snapshot of the option chain at the end of the day. Right. So ThinkBack isn't the backtesting tool.
what I think that's what they were trying to get at was how you can do a back test or looking at how the results change from month to month. See, the thing about Thinkorswim Scan, it's kind of a really neat thing. You can see, unlike any other software, you can run the scan right now, like for a weekly scan. So if you ran a weekly scan right now, it's not going to tell you what was the results from Friday. It's going to tell you what is going to be the results for this coming Friday based on today's prices. So there's a big difference in, I'm not sure what the particular question was going to ask. She says, I see, thank you, was the answer. So TJ wants to know what is the best testing tool. So that's why we got Cindy, so she can share with you. That's a good question.
So a couple of things. I like her idea and what you would do. So by saving it as a query, it's a dynamic watch list. So what we've now saved, you can tell I use this account to teach. So by saving this as a query, she's right. The watch list, when we come in here on the quotes tab, if we open it, where's our person in here? O-N-O-P. This watch list will change every day or every couple of days depending on how sensitive that the scan parameters happen to be. But what you could do is you could come in here and maybe run it on the weekends, run the scan on the weekend, and use this floppy disk and save it, and maybe you call it person, what would last weekend have been? 5/27/16. And then the next week, person, 6/4/16, and then person 6/11/16, and then that way you could actually detach those watch lists, have them side by side, maybe sorted by symbol order, alphabetical by symbol, and then you'll have the answer to your question. But you'll have to build that going forward. You won't be able to go backwards and do that. And I think after about 6 weeks, you'll have your answer on, is it worth it to keep doing this once a week, or do I kind of know how it adjusts as time passes? Now for back testing, our Think Back tab is literally a snapshot of the option chain and market close every day. And you can come in, and if you had an old signal, so John, earlier you had Qualcomm up here. So come in here on Qualcomm, and on the monthly chart you had a signal. And we had the sell signal all the way back here, and that was the beginning of July last year. So now I can go on my daily chart, find the beginning of July last year. So around here. You also had a sell signal, that's June, July. Oops, end of June. Where did July? Yeah, this would be it. So on 6/24, then you could come in here and say, well, on 6/24, what did the option chain look like? If you were thinking, well, what if I had put on that option 6/24? And there's your option chain. And all the information that you're used to on an option chain is here. When you customize, you have your choices, just like if you're dealing with today's option chain, and then you can actually, place the order. If you came in here and said, well, what if I took that as a sell signal and I went ahead and bought a put spread? So we'll come in here at the money, it's about 65. So what if I came in here, bought the put spread, let's make it a little bit wider, give ourselves some room to profit if it does go down. Say you think it's going to drop to about $60, and you're willing to risk a couple $100 on that chance. Then you can lock in the price and say, well, where would I have closed it? Well, it looks like maybe a couple months later. Oops, I used the Julys. We need to come out further in time. If we're going to close it a couple months later, it's about the same price. That worked out well for us. A couple months later, and it's going to calculate, would you have been profitable or not? So that's how you can back test option strategy ideas, by combining those entry signals from the past with an option strategy. Now notice the little chart down here. it has the person pivots on it, and it's on this monthly chart or the daily chart because we saved as default those chart settings. And so it's going to remember, and it's going to open up your chart settings everywhere. But here's a little trade and how it would have worked out or not. Nicely profitable at the beginning, and then because you continued holding past this buy arrow, you ended up giving back your profits and ending up with only a small profit as opposed to getting out earlier. But that's a nice way of testing your option strategy ideas. Now, just testing in general, if you wanted to test something like the buy arrows or the sell arrows or whatever the case may be, you can set that up as a strategy. And the easiest way to do that is to take your criteria over to a strategy. I'm going to use a strategy that's already pre-built since you were talking about, seasonal patterns, and we have a seasonal pattern that's already built in here. Now it's only one signal, so if I click here on the code, we get to see what the signal is. And the signal is get month 10, which is October, for your entry, buy it in October, and sell it in month 5, which is May. And of course that idea comes from, well, what if you did the sell in May go away and you bought it every fall? Because there's a lot of schools of thought that, that would make money hand over fist in the market. So we're going to come in here, use a tradable symbol. SPX is not tradable. We could test this with the futures as well. And let's test it over the past 10 years. And we can go daily, weekly, or monthly because remember, our signals are being generated off of that monthly candle. So we come in here and you can see entries and exits. You can also see 1 year the entry was skipped. And that's really valuable when you're back testing, is once you decide you think you have something, add filters because there are 4 market environments. You have bear market, you have bull market, that strong uptrend. You have sideways choppy, kind of what we've been going through the past couple of years, where it's a rectangle, but it's really wide swings. And you also have that sideways, squeaky, tight, and boring, nothing really happening. 4 different environments. Your strategy should work well in one of them, work horrible in one of them, and be fair to Midland, either up or down on the other 2. Well, this particular strategy would work horrible in a bear market, so let's skip the trade for the bear market. Right-click on any buy or sell signal, and where's my report? Show the report. So over the past 10 years, skipping that bear market year, we had 13 signals for our opens and closes, for a net gain on 100 shares, total P&L. We also get to see what was the worst booked profit or loss. Here's our worst booked loss in there. Again, we skipped the 1 year where it would have been just horrendous. And then the other thing you can do that's super important, add your floating P&L. You don't see it on here automatically. It's in the strategy settings. This is also where you can go, if you're a larger account size, maybe you trade 1,000 contracts or 1,500 contracts. So you can change your size in here. If you're using, maybe instead of a filter, maybe you're using an exit, a trailing stop or something like that. So you've got different entry and exit signals going on. Well, do you want it only off of that one strategy, because this strategy has the buy and the sell built into it, or go ahead and buy, but if I get a trail stop sell, go ahead and kick me out early instead of waiting for my strategy. So you get to choose in here. Can you build that into your ThinkScript code? You can. It's going to make the code a lot longer and a lot more complicated, and why bother when you can simply do it here in this box? This display floating P&L, really important. And the way I tell people to use that is come down here to the biggest drawdown your account size can handle, and then look across. And so let's say the most we can handle is $200 loss. Right, or 180. Well, if I look to the left, I can see red lines that are below 180. that means I can't do this strategy because I would end up losing more than $200. And let's say the account size is itty bitty and can't handle that. Now, odds are you're not dealing with $200. You're dealing with $20,000 or $8,000 or whatever the case may be. But at what drawdown? Because that's during the life of the trade. And you can see some of this is color coded. While you're in cash, you're kind of flat. But there are times when the drawdown, let me come back in here. Oh, sorry, our report. Who's our biggest gain? Right here. So from beginning to end, that's the profit. But what you don't see in a backtesting report is in the middle. In the middle, before you got your exit signal, did that account go, say, minus $8,000 in the red? And had you closed it at that point, this would be a giant loser instead of the eventual profit. So backtesting reports have some drawbacks, and that's one of them. You don't see the heat between entry and exit. But you could take this same one and apply it to Qualcomm. If you see that there's a pattern, gold has a pattern every year, you could set it up to have those entry and exits based on calendar dates because you see that seasonal pattern. So John, other questions? He must be reading the questions.
Yeah, sorry about that, sweetie.
No, that's okay.
We had, TJ also wants to know, can you scan option data? Last question there.
Yes. And before I do that, for those of you that are looking intraday, you've probably noticed that intraday, same problem with the tick charts, you can only go back so far before you start losing things like your 5-minute period. Use on demand to go back further in time. Well, I want the 20 days before 4th of July last year. Well, use on demand, pick 4th of July last year, and then it'll give you the 20 days going up into 4th of July last year. So on demand lets you replay the past. When we come to our scan tab, today Option Hacker and Stock Hacker are identical. They used to not be, but if you do build it on Option Hacker, you get a different little icon on your watch list. So for that reason, you might choose to do those there. So we don't mess, well here, I'll just come in here. So option filter, these are all of the option criteria that you can scan for. And then what it will return is different options. So instead of returning the underlying, it'll give you specific options. And then from there, what you could do is, let's say you find, a short put that meets your criteria, but you'd rather go risk defined. It's okay. It found the put. Now all you have to do is decide, do you want to buy a cheaper put so that you're still in a bullish position using the vertical? Do you want to maybe buy a longer dated put, turn it into a calendar spread? But either way, it found the option you were willing to sell. You just have to figure out, do you want to sell it naked or within a specific spread? So that was a great question.
That's because we have great clients, and they have really come a long way. And guys, these monthly customer appreciations that we like to do, bringing in Cindy, for example, I mean, and this is a Tuesday. I know this is like brain-curdling stuff for most traders, coming off a 3-day holiday, but for real traders, I mean, we kind of we're watching. How many of you, raise your hand, were looking for Sunday night's open on Globex? Of course you were, right? Everyone was looking to see where gold was going to open and look what the euro currency was going to do. So, I mean, to ask Cindy to come in and on a day right out of the box of a 3-day holiday weekend, I kind of feel guilty, but I know she knows her stuff, and she was probably jonesing top of the list fighting to get that quote on Globex's opening on the S&P Sunday night. Cindy, don't answer it.
I totally did.
I know you did. Anyway,
I was at the computer early and watched it open.
So what we try to do here, folks, is to put some workable things between someone, not just my methodology, but put things together and what's the best way of using and getting the most out of the TOS platform. And wherever you get your ideas from, I think the key is that, and I always teach this, Cindy's heard this before, there's never one real holy grail of trading, but I think combining several different techniques, just like I did with trying to look at Qualcomm. I mean, there were some other names in there, and I know we had like one that popped up was Pfizer, but the moral of the story is to check out what the condition of the market is, and whether your view of the market is that the overall market's going to go up, down, or sideways. Just remember, this year has been I would have to say, what I've been calling an example of a swarm of locusts going from one field, sucking it dry, to another. They're just jumping around from sector to sector to sector. And, you know, right now, got a lot of ironic where you see the Dow down and you see some down component stocks down, like Home Depot, right? Home Depot really not going anywhere. And when you look at the market condition of a stock like a Home Depot, which has been a really strong favorite, you know, ironically, it's been in a couple weeks ago, it generated a weekly sell signal. It's not rallying on a lot of strong volume. While we did not generate a monthly sell signal there, this is a stock you start looking at 52-week highs, and you look at some of these names and you go, can they go any higher without a pullback? Can they go, maybe they don't go down, maybe they just stop the ascent. And so when you run scans, you're looking for what's driving a sector index like the Dow. It's sector index in the content. The Dow is not a sector index, but it's, you know, to me it's a high dividend yielding sector, right? Index. And I look at what rules the roost there, and some of the big names, you know, you take a look at a Nike, for example, they're struggling. When I look at stuff like that, I go, wow, what's my upside risk, and can this thing break out? What's the condition of this rally? Has it gone up on strong volume? How long has it been going up? So I can make a better idea, a better strategy. And while we don't have, and I'm just harping on Home Depot because it's one that we were actually in some credit call spreads here, and I think that, you know, this is one that while we look for, like I was talking, it's the opposite of Qualcomm. Well, Qualcomm might not be in the best, strongest uptrend. It could be developing, or at least it's shown that it's broken a downtrend and a multi-month, multi-year downtrend. And so now I can start to develop some strategies around that and utilize the tools. And that was kind of like, how do we find these ideas? And then it's a matter of defining your risk. And I know I heard Cindy mentioned defining risk, right, depending on your account size. And that's what's really kind of neat about looking for trades. So I wanted to say thank you so much, Cindy, for coming in and making, you know, the day after the 3-day holiday, and, you know, getting in here on after a markets. And now it's not that we had a 3-day holiday. We've got 5 days of work to put into 4 days. That's the killer right here, folks. So with that said, I know Cindy's she's overworked, and the markets are keeping her on her toes, and I wanted to say sincerely, thanks, Cindy, for coming in and addressing and sharing your knowledge and skills on the Thinkorswim platform with our group. So if that's it, we got this book, Dano. It's recorded, and I know there was some really awesome information that Cindy provided. So with that said, everyone, until next time, Cindy, thank you so much for your time and your knowledge, and I know everyone appreciated it, because I do. Thanks, everybody. Thank you, Cindy. And that ends the show. So with that said, the next thing we got to watch for is the monthly unemployment report. Cindy, have a great evening and a great week, and we'll see you next time.